Hello everybody and welcome to this edition of Longhorn Diaries. I couldn't be more excited to have Mr. Jordan St. Pierre here joining us from the Cochrane Mortgage team with Mortgage Architects. Say hello, Jordan.
Hey Trav. Hey everyone.
And now that we're almost at Evansburg, I'm gonna start the door. Hi, this is Travis Hawryluk with Remax Real Estate and Travis Hawryluk and Associates. And this is Longhorn Diaries. We'll be bringing you everything you need to know about the real estate world, all from the cab of my truck. Jordan is a fantastic friend of mine, a really good friend. I've known him forever, and he happens to be a rock star mortgage broker that works out of our office with Cochrane and Mortgage Architects. So Jordan, how long have you been in the business now?
Well, Trav, I started about 6 years ago. In 2012, I started working alongside Cochrane.
Okay.
And basically just progressed from there. So we worked together as a partnership on the Remax office, as you mentioned.
So you guys are full-out brokers, that's correct,
Yep,
right?
yep.
So why don't you tell us what the difference is between working with a mortgage broker to find financing or, let's say, going to a traditional style bank? What would you say are the major differences with that?
I mean, the initial advantage would obviously be the options. So we don't just work with one lender, we work with multiple lenders, and we look to find the best option for each scenario. Whether it be rate, might be the property, might just be the specific niche product that is needed for the client.
Right.
So we have options to shop it around to different lenders instead of just being stuck with one suite of products.
Nice. And you know what? One of probably the most popular question I get when people ask about mortgages, I'm sure you do too, is interest rates. And we all know that interest rates are super important. But what are some other things that, a client may come to you with that is going to be just as important as interest rate in their financing? What are a few other factors that go into good lending?
Terms. Obviously, prepayment terms. For a lot of people, that's a big factor for them. So some lenders have maybe 20% lump sum in a year. Some might have 15%. Some might have 10% lump sum. Some might let you double your payments. Some might allow you to increase them annually by a certain percentage. So for a lot of people, it might be that makes or breaks. Also, with a lot of these good rates out there might be hooks in them.
Okay.
As far as payout penalties. So a lot of people get fixated on rate, but it's not necessarily all about that. There's a lot bigger of a picture in the background that you really have to be conscious of. It might not just be the rate.
Awesome. Those are great points because, yeah, like I said, a majority of people come to me and they say, well, who's going to give me the best rate? And I always tell them exactly that. There's many things that you got to look at.
Not really about rate.
Right.
You can get burned like that.
Awesome. That's great information. So you said that you started in the industry about 6 years ago in 2012. What would you say is give us a few things that have changed or evolved in the lending industry the most in your 6 years of being in this business?
The biggest one, the biggest two would be the last two rule changes. So they implemented stress tests. So they implemented this one in late 2016. They wanted to put a stress test in for anyone that had an insured mortgage. So anyone that had less than 20% down. Okay. They made everyone qualify at benchmark rate. And this was a big change for a lot of people because before, if you had a fixed rate mortgage, you would qualify at that rate for qualifying purposes. Okay. So once they introduced that qualifying rate, it took off that extra little bit that someone could have possibly borrowed, and it made a big difference. And although it might be a good rule, it definitely has taken a lot of people out of the market. And then just this past year, January 1st, they implemented the stress test for conventional mortgages. So anyone that has a mortgage with more than 20% down, right? They also have to qualify on a stress test rate. So in that case, if it's a fixed rate mortgage, it's going to be 2% above the actual borrowing rate or the contract rate. So that was a major change that took a lot of people that may have had a lot of equity kind of out of the market. Okay. It did take a few buyers out for sure. So those are the two biggest changes we've seen recently, and I would say that they are very, very. They have had made a significant change to the market.
Okay. So it's one thing to change the market and to, kind of, obviously change people's ability to qualify for financing. Now, are these changes, are they good things that have happened in the industry, or would you say kind of bad things? Or is it basically a filter to better plan for our overall economy? What would you say to that?
I mean, they're neutral so far. I mean, I don't think that the government has seen the full extent of what those rule changes did because they compounded them so fastly.
Okay.
Like it obviously had one in 2016, and then you had one at the end of 2017, beginning of 2018. So I don't think they've seen the full extent of what these rules have done and how they've changed the market. They were implemented to try and cool down hot markets. They weren't necessarily meant for markets like ours that weren't necessarily overheated. They may have been balanced, and now they may have caused some harm. So hopefully they can take the data from what's happened over the last few years and kind of dissect it and see what really is important going forward, what actually makes sense, especially localized.
Right.
I mean, making a rule nationally when all markets are different maybe isn't the best idea.
Right. So what you're saying is that a lot of these changes may have come from booming markets, let's say, for example, Toronto or Vancouver, or maybe it's come from a certain sector, maybe the energy, oil and gas sector, or a lot of these changes that we've experienced, have they come from those kind of markets and or big economies?
They were targeted for Vancouver, Toronto, and basically any larger market like that was overheated, and that's what they were designed to cool off.
Yeah.
Although I do think they've cooled off spots that didn't need cooling off.
That's a great point. Do you foresee any kind of major changes coming down the line for lender financing, or can you provide us with any top tips for those people that are maybe looking to maybe buy their first home next year, or maybe looking to buy an investment property? Can you give us a little bit of light into that sector?
Yeah. So personally, I don't think there's going to be any more rule changes. Like I kind of said previously, that they don't know the full extent of what they've done yet. So I think they'd be kind of naive and they'd be rushing themselves to throw more rules at us and to cool down a market that is already shaky. I just don't see. I see fixed rates slightly rising because the U.S. is rising their fixed rates and will follow hand in hand.
Right.
As far as prime goes, that's kind of an independent function, and I don't really see that getting raised up too much. I know there's a lot of industry people think that the next announcement they won't raise the bank account rate, so prime will stay intact. As far as people looking to buy a property this year or maybe next year, especially a first-time home buyer, the piece of advice I would give would be start as early as you can. So there is steps you can take to make it as easy as possible and seamless. So one thing to do, or one thing I would recommend, is maybe call up Holly or myself if you have any questions. Sit down with us, take a look at things you can alter well in advance to make qualifying easier.
Right.
Whether it be changing saving patterns, paying off a piece of debt, or really just saving up that down payment. Because a lot of first-time home buyers especially, they'll come in, they have this idea of what they're going to purchase, and maybe that isn't realistic. Maybe their income isn't up to where they want it. Maybe the last couple of years haven't been where they wanted it.
Right.
And it might not be a realistic expectation of what they're looking for in the market. So it's always best to sit down well in advance, the earlier the better, and tailor a solution and find out what's realistic for that client.
Kind of make a game plan, right?
Exactly, and start as early as you can because there's no reason not to.
So Jordan, how can people get a hold of you if people are looking to buy their first home, upsize, downsize, maybe buy an investment property, a commercial property? How do they get in touch with you and Holly?
Best way to get a hold of us, Trav, is give us a call, 780-485-7908. Or even stop by Holly or my website. So Holly's website is www.hollycochran.com. Mine is www.modernfinance.ca. You can find us there. All our contact info is on either site. And feel free to give us a call if you plan on purchasing, selling, anything in the near future. We can help you set a goal or get you in line to do what you want to do.
Well, Jordan, thank you very much for being on the show today.
Thanks so much for having me, Travis.
You're doing a fantastic job at what you do, and I would definitely like to give a shout out to Jordan and Holly, because every client of mine that do work with them, they do a top-notch job, provide fantastic service, and really in the end do what's best for the client in their situation. So Jordan, can't thank you enough. And now that we're almost at Evansburg, that's a wrap on this edition of Longhorn Diaries. See you next time.